Swing trading strategies is the topic for today, and that means looking from one day into the next. So I brought up Tesla here as an example. You can see I've got a 5-minute chart. No particular reason, by the way, for this stock or for this time interval. So you could use other stocks and time intervals. This just happened to be a good example to demonstrate what I want to share with you today about swing trading. All right, so what happens the next day is that, let me get this activated. Next day, boom, up she goes. So we get a gap up. All right, booming bull, gapping up. By the way, I'm using TradingView here, but again, you could use any trading platform. So what the heck is going on here? Now, the big question is, all right, we've started the next day of activity in the markets, and will this be a gap and go? Or will it close the gap? So for those of you not familiar with the terms, they're real simple. It means that we have gapped, let's see, we use the yellow highlighter here. That shows up pretty good. So yesterday's close was there, today's open is there. And so we gapped up, and there's a big hole, or as the Japanese call it, a window. So there can be, well, 3 things that can happen, like in all market conditions. So it's really not any different than anything else. It can continue to go up. That's called a gap and go. Or in the future, very near future, by the way, the gap could close, price comes all the way back down to here, or of course it could go sideways. All right, so I know that's a revelation to you. Like, wow, Barry, I already learned 3 things here today. But my point is that gaps are kind of like any other time in the market, but they do give us some extra clues. And that's what I want to share with you today. Clues as to which of those 3 will happen. All right, now I'll give you examples. We're not going to talk about sideways because sideways you can't make any money. So we'll talk about whether the market will gap and go up. Should we be long here, or should we fade the gap and look for the gap to close? All right, so what are the clues? Well, the biggest clue is, first of all, 1 bar. So let me bring up this here. So we opened here, and we closed up here. So during that 1 bar, again, this happens to be 5 minutes, but you can use other time frames if you want to. Then we see that, okay, the first 5 minutes, the market was bullish. So we do not have a closing of the gap yet. So our first little piece of evidence is, oh, the market is bullish on the open. All right, is that enough? No way. That is definitely not enough, but that is one piece of evidence. A stronger piece of evidence is looking at a previous swing high, previous cycle high. And, oh, that is very significant. So the markets have cycles to them. So we've got down cycle, up cycle, down and up, down and up. It oscillates, okay? And so that's what we're going to look at is we are in a cycle low here. And in the next day it gaps up, but, and this is the key point here, is that where we opened was at or above this resistance level. So it broke above, it didn't even just break above, it gapped above that resistance level. So that's very, very significant. That means that probably the specialists, what used to be called specialists at least, see this level and they're saying, nah, I think we'll just open the market above that level, right? That's their job, to make a market, and that's the open that they decided we would go ahead and open this market at. So that is a bullish signal, all right? And so now if we go forward, let me activate this and go, okay, sure enough, second bar is still going up. So if we played the bullish side of the market, we're doing good. Uh-oh, big red bar. What do you think now? Now, just little side note here. This is where a lot of people get freaked out. And maybe you'll see yourself in this, where you're long and you say, oh no, a red bar. We get enamored with red and green. And we get scared out of our positions and we freak out. Oh, but if you did get out there, wait a minute, we got another green bar. Up, kind of neutral. Up, still going up a little bit. Oh, another big green bar. You see, bar by bar, you need to watch your emotions. Analyze your emotions. Be self-aware of what's going on bar by bar. And then look, if you got out, now you could have made a lot more money. a lot more money. Market's still going up. Okay. And is that all she wrote? Let's see here. That is, it's not all she wrote. Still going up. Okay. So do not get out of markets too soon. I can help you with that with, again, my cycle indicator that I give away for free to, well, pretty much everybody who watches, actually anybody who watches this. If you want to get it for free, you can. So what they will tell you is timing, how to know that, oh, okay, this is the time for the market to continue its uptrend. And very few people actually teach you about timing. Everyone talks about price over here, and yeah, they'll talk about volume here, but very few people talk about the x-axis, time. And when you think about it, hey, charts only have two dimensions, time and price. So if you're ignoring 50% of the information on the chart, which is the time axis, well, how can you establish a probability in a trade? So timing is the one thing I find that most people are missing, and is what's creating them to be losing traders. They don't know the right time to enter, the right time to get out. So, okay, so that is your gap and go pattern. And again, one bar pattern. Look for it to open at the low, close at the open. Look for it to gap above previous resistance. All right, let's go to the gap close scenario. All right, so this actually is the very next day. And now, as you can see, we have pretty much the opposite scenario. So we opened up here and the market gapped again. So it gapped from there all the way up to there, right? The gap is not to there. The gap is to there. That's where the market opened. And then during the first 5 minutes, it opened up there and closed down here. So again, very first candle gives us a indication, our first indication, that's step one, as to whether this gap will gap and go or close. So now we've got this big gap below us. There's one other thing here that I'm going to show you. If I can scale this without moving things around too much. There we go. Yes. So talk about support resistance. So now you'll see that we did have resistance above us, and it comes from several days ago, way over here. But this resistance level, sure, again, the market gapped above a resistance. Remember on the last example, we had market gap above resistance too, but then it went up. And this one, it gaps above resistance and then comes back down. Meaning that, oh, wow, yeah, we went up really fast, got overly exuberant for whatever reason. It might have been a catalyst that day, news or something. But the market immediately rejects it within the first 5 minutes after the, by the way, if you haven't seen my video on market on open orders, highly recommend that you do that. But when you're dealing with a 5-minute chart, and that's why I'm using 5 instead of a 1-minute chart here or less, we've got market on orders are already flushed through. And so then let's just finish up by seeing what happens here. Again, let's make this a little bigger here now. And there we go. So coming on down, coming on down, coming on down, down. Whoops. Oh, going back up. Now, if you took your gap close, you might be thinking, oh, darn, I shouldn't have taken the gap close. Oh, or maybe you waited and you didn't get out yet. And you said, okay, I'm going to take this. I'm trying to get all the way down to here. And I'm not going to get out until I get down there. And so the market goes here, you're still in short, and then it goes up. And now again, same as the last example, you're starting to think, oh no, I'm giving all the money back. And wait a minute, if I went short there and the market's already come back almost to where I got in, now I'm not making any money. And bar by bar, your mind starts to mess with you. Well, what's actually happening here? Look, we had resistance here, right? We had resistance here. And I'll draw both lines here. And we also have resistance here at this level. And so this little cluster of resistance, that's what the markets, or in this case, it's support, was resistance. Resistance turning into support now. And so the market bounces off that. And people see it. Everybody and their gerbil knows that's there. And so, you get some people buying there. But if you had the patience, there we go. Now we have closed the gap, or as the Japanese like to say, closed the window. So again, how would you know this? Well, you got to be able to time things and not get freaked out, because if you just trade price action alone, it can be very deceiving because price doesn't give you time. Right? A lot of people say, well, I don't need no sticking indicators. All I need is price and volume. Well, you got price here. But again, how do you know that that's not going to keep going up? And how do you know that's going to come down? You have to have some sort of cycle or timing indicator for your entries. And then volume, oh, don't even get me started on volume. People that say, well, you only need price and volume. Guess what this volume is? That volume down there is the retail volume, because it does not include dark pools. So back in the day when I first started trading, yeah, I only traded price, action, volume, and a couple of moving averages and did great. But that's before dark pools existed. Now, dark pools, well, where do dark pools exist? Who knows? They're off exchange. They're not public. That's the whole point. They are dark. They are intentionally kept away from the public in real time. Now, looking at a historical chart like this, the volume actually will show up, but not when you take the trade. So the professionals, the hedge funds, the sovereign funds, so forth, the big money, well, let me put it this way, the smart money, you're not seeing that. You're seeing the, well, let's be polite, the unsmart money in real time. That's the volume you're seeing. So if you trade that volume, well, you're going to get what the unsmart money gets, which, you know, I think we all know what that is. Anyway, that's it. Oh, by the way, again, you can get my cycle indicator full understanding of it. It's actually for full disclosure, it's a modification of a common indicator that's already on your charts. 90% or probably 99% chance already on your charts. We modify it. I teach you how to trade it, to catch these swing highs, catch these swing lows for buying and selling with incredible precision. I mean, to the penny, to the pip, to the tick. So go ahead and get that at indicatorwebinar.com. because they give you a whole teaching on it as well as a recording. You can view it anytime you want, absolutely free. And then, remember to subscribe, because I've got new videos coming out all the time. Obviously, they're free, so you can get these videos in the future and get notified when they come out by subscribing to the channel.